Okay, so the conversation continues, and we're just looking at $70 per barrel for Brent crude overnight on Thursday. That's quite historic. Flash overnight. Then we're down to about 69.27 early this morning. So let's continue the conversation with Professor Uche Uwaleke, who has been with us for about the last 30 minutes of the program. Professor, thank you very much. And you were explaining before Dolapo had to exit the show about the correlation between the stock market and crude oil prices. Please go ahead.
Yes, that correlation is very, very, very strong. Look at what has happened between 2nd of January and yesterday. The index, if you recall, closed at around 38,000 on 29th of December last year. Today we are talking about nearly 44,000. Market capitalization was around 13.6 on December 29, and today we are also talking about 14 trillion. So you can see that the oil price rise is having a positive impact on the stock markets. This is the first time, in many years, one would begin to have this, what you might call the January effect. January effect is the tendency for stock prices to rise, in the month of January, and in many jurisdictions, for it to be even the highest in the month of January. And that's more because of the general optimism, not only about the world economy, but also about the Nigerian economy. Because Nigeria's economy depends on oil, investors know the economy depends on oil, and if oil price is doing well, okay, output is also not disrupted. It means that, the economy shows a lot of promise. So this is the time to come and identify undervalued stocks, because some of these stocks have good fundamentals. Identify them, buy them now, and then sell later. So that is what we're experiencing. Yes, we are also witnessing some portfolio, rebalancing, going on. Investors, particularly institutional investors, are moving funds from the money market to, stocks because of the drop in the rates in treasury bills. So we see money being now invested in the stock market. Yes, that is one factor. The other factor remains, the main factor remains the fact that oil prices are doing well. But whether this is sustainable, again, will depend on what is happening in the international crude oil market. So there's a strong correlation between that. The same applies to reserves. We've seen accretion to reserves, to as much as $40.4 billion US dollars. And that will not only help the central bank to intervene in the forex market and continue to seek this convergence of rates across all segments of the market. It will also help to stabilize, the value of the naira. And as long as the value of the naira, keeps stabilizing, particularly with the investors and exporters window that has also increased investments, into the Nigerian economy, you should expect that the confidence in the economy will be buoyed, and more investors will come. So the stock market is benefiting from it. The foreign exchange market is also benefiting from it. And we also tend to see the pass-through effect of this, even on inflation, because we are an import-dependent economy. We import so much in this economy. If exchange rate stabilizes, particularly if it's able to come down, given this volume of reserves that we have now that can finance several months of imports, we should be able to ensure that the exchange rate now comes down, okay, such that it will have a positive pass-on effect on inflation. And if that happens, you can also expect that interest rate regime in this country, will be low.
Okay, well, I want us to talk about
crude oil price increase. It's also having a positive impact on the banking sector, in particular, banking stocks. Some of the banks that are exposed to the oil sector, of course, are benefiting, because it will go a long way in reducing their improving the quality of their assets and reducing the non-performing loans of such banks. And we have seen that impacting their stock prices. Look at GTB. GTB that was at 2 naira a few days ago, today is as high as 50 naira. Okay, you have a stock like Zenith too, from 26 to about 42, 43 naira. First Bank. So many of these banks are doing well, and that's on account of this increase in oil price.
Professor Waleke, let's go back to your earlier conversations, much earlier, about the budget Now, let's look at what do you think, as far as the budget 2018 proposals, you listened to the president on the New Year's Day address, speaking on massive infrastructure, road, rail, and power. So if we have additional, and we do have additional money on the table, excess crude oil money, how do you think we should spend this right away?
Thank you very much. The 2017 budget capital component was about 2.4 trillion naira. Now, out of that, from what we have been told, just about 1.2 trillion, has been released. So we still have a shortfall in the implementation of the capital component for the 2017 budget. Okay, so the important thing, in my view, is the implementation of the capital component of the 2018 budget. We have identified some capital projects. If you recall, the Power Works and Housing is taking the largest share of over 500 billion. Okay, so we need to ensure that that money is fully cash backed. The Minister of Works and Housing the other day was even talking about money owed to contractors amounting to 2.8 trillion. Okay, that's well in excess of even the total budget for his ministry for the entire year. So the important thing is implementing the capital component of the budget. Now, if we have excess, as I said earlier on, we should put it aside. We have the infrastructure fund. Okay, the management of this fund, yes, rests with we have the sovereign wealth fund that is managing it. But if we have some excess, I wish to suggest that the federal government, in consultation with the states, the National Economic Council, and this time around, the National Assembly too should be involved. Members from different constituencies should identify these constituency projects, these capital projects, that must be, implemented in order to impact positively on the welfare of the citizens. So these can be jointly, executed. If there are roads, for example, after executing them, those roads should be handed over, to the private sector for maintenance. So we need to use this money to provide more infrastructure. If we are doing roads, we use them to do roads, tow those roads, and then hand them over to the private sector, for maintenance. So we need roads, we need rail in this economy to be able to drive growth, inclusive growth. Look at the type of GDP growth we are having. The last one was 1.4. The second quarter of 2017 was, later revised to 0.72. And what is clear is that this growth is weak, is fragile, and that's more because it's only been driven by the oil sector.